Does the child tax credit have you confused? Are you worried whether you're going to owe money? Do all the different phase outs get you confused? Stay tuned and we'll try to make this very easy to understand. Welcome back everybody, Doug Burson, CPA here, and today we're going to talk about the advanced child tax credit and the child tax credit. And I'm going to try to make this easy to understand and also show you some planning opportunities that you may not have even thought about and hopefully will find useful over the next 30 days to help offset some of the tax liability that may be coming. So let's get started. So first of all, what are we even talking about here? Well, we all know about the $2,000 child tax credit per kid if they're less than 18 years old, so up to 17. But then there's also this new advanced child tax credit, and a lot of you have gotten checks over the last 6 months or so, $300 a kid, or I believe $250 a kid. And so you know what I'm talking about. And what they did is essentially they gave you half of the child tax credit that they think you're going to qualify for on your tax return. And that's the big deal. They think, but it may not be true. And we'll go over what I'm talking about here through this video. What happened is they said, all right, if your child is 5 and younger, you're going to get a $3,600 child tax credit. If you remember, it was $2,000 last year. So $3,600, an additional $1,600. And if your child is between 6 and 17, including 17, they'll qualify for $3,000 or an additional $1,000. And so that's the baseline we're working with. But what happens if you don't get to claim that child, or you get to claim an extra child? We're going to go over all that too. So let's move on into that. The thing is, there's a couple different phase outs here, and this is what's confusing people. What if you make more money than last year? That's a big deal. So let's say last year you made 120, but your business did really well, or you got a pay raise, and this year you're going to make 200,000 or 175,000. So let's talk about those phase outs. There's two different. There's the one for the 2,000, what we always got. That limit's pretty high. So if your income, your adjusted gross income is going to be less than 400,000, you will qualify for the full 2,000 per kid. So for that section, you're going to be okay. If you're single, head of household, all other filing statuses, that number is 200,000. So if you're not married and you made less than 200,000, you will qualify for the 2,000 per child tax credit as long as they're your dependent. You get to claim them on your tax return, all those normal things. So that takes care of that one. That one's pretty easy. The 2,000, for most of us, we're going to be okay. But what about the additional child tax credit? The additional child tax credit has a different set of phase outs, and it's very similar to some of the numbers we saw last year during COVID. So if you have an income, married filing joint, of 150,000 or less, you will get to keep all of the advanced child tax credit, that extra 1,000 or 1,600, as long as the child is your dependent on the 2021 tax return, the one we're about to file. If you are a head of household, that number is 112,500. And if you are single, that number is 75,000. So if your number is below that and you get to claim the kid, you're safe. You don't have to worry about it. You're going to get it. If you did not get the advance payments, you're going to get to claim them on your tax return. If maybe you've had an additional child, or maybe your ex-spouse claimed the child last year and this is your year, you'll get to claim that amount on your tax return. So what does that mean on your tax return? What that means is we know you're going to qualify for $1,800 for every child that is 5 or below, or $1,500 for every child that was 6 to 17. So that's what we got to reconcile in your tax return. You qualified for $3,000 or $3,600 on the tax return, but you already got half of that. So we're going to have to offset that on the tax return. For most of us, that's going to be okay, because it's still going to leave us really close to the original $2,000 we were going to get on a normal year. So for most of us, it's going to be okay. But what happens if it wasn't your year to claim the child, right? now we got a problem, because now you've received a child tax credit, an advanced child tax credit that is, that you didn't qualify for. And that's where some of the problems are going to come in for some of us. So we'll talk about that next. So what if you got more than you should have, right? Maybe last year you claimed the child on your tax return, and so the IRS has sent you these payments and you didn't opt out. Well, the simple answer is, as long as your income was high enough, you're going to have to pay it back on your tax return, and there's going to be an adjustment. But are there any safe harbors here? And yes, there is. There's a whole nother set of safe harbors for those of you who may have received the child tax credit, the advanced child tax credit, because you aren't going to claim the child this year. And what are those thresholds? Okay, so what if you got the child tax credit and you weren't supposed to, because you're not going to get to claim the child this year, and you forgot or just didn't opt out or didn't even know how to? What the IRS has said is there's going to be safe harbor protection for people so that there's not an undue burden. Whether that's right or wrong, who cares? That's the rules. So how does that work? Let's say you got the advanced child tax credit premiums. They were sending them to you. You went in your bank account and you cashed them, and now you're filing the tax return, and you're like, oh no, I don't get to claim the child this year. Well, if you are married filing joint and you made less than $60,000, or head of household less than 50, or single less than 40, what they have said is you won't have to pay any of it back. Even though you weren't eligible, you don't have to pay it back. That's a pretty big win. Good thing you didn't opt out, because you get to keep it. Good for you. But what if you made more than that, all right? So the phase out starts at 60 if you're married and ends at 120. So it's going to be based on that, from 60 to 120. So if you're halfway between those two, you'll get to keep half of it. So it's a phase out. If it is married, it's 120. If you're head of household, it's 100. And if it's single, it's 80. Okay? So between those numbers, we have a phase out. You're going to have to pay some of it back, some of it back. You get to that top number I just said, you pay it all back. So that's a safe harbor. And that's why this is so confusing. There's so many different numbers. There is for the $2,000. There is for the child tax credit where you actually are eligible for it. And then there is the, oops, safe harbor, I shouldn't have got it, but I got it, and you don't have to pay it back. All right, so hopefully this has made all this clear for you. If not, drop some messages down below. I'll try to spell it out. I know videos, sometimes it doesn't come through as clear as I would like, but we can address that down below. Just ask the questions, I'll be glad to help. Now, there's some big planning opportunities here. I think we've covered the credit, but now what do you do? So let's say you're self-employed and you're married, and we know that we got the advance payments, or even if we didn't, we opt out, but our income is $200,000, so we don't qualify. What if, let's say you're a contractor and you've been looking at a new Bobcat, and we know those bad boys aren't cheap. So you're gonna go buy a Bobcat. I don't even know what they cost right now. I haven't looked. Let's just say 60, 70,000. You just took your AGI from 200,000, you bought a piece of equipment, we wrote it off. Now you're at 140,000. Guess what? You qualify for the advance premium, that extra 1,000 or 1,500 per kid that you weren't gonna get before. Not 1,500, but you know what I'm saying, the 1,600. You're gonna qualify for it, and all because we went in and bought that piece of equipment this year, okay? So not only did we get the tax deduction that also helped offset our tax, but we also just got the child tax credit that maybe we didn't qualify for. All of a sudden, we're now in the mix. What about if you are an employee? Maybe you qualify to defer all the rest of your revenue for December into that 401k and get your income down, so now you get to qualify for the rest of that premium. I'm not saying that's the right answer for everybody, but I want us to think about these things. we can now potentially buy a piece of equipment and get a double benefit, not just the taxes, or contribute to an IRA, or your IRA, or contribute to your 401k, or do a profit share for your business that maybe you weren't thinking about, and get a lot of it paid for, especially if you have multiple children that qualify, by just thinking about these things a little differently than you might have thought. So hopefully this is something you hadn't even thought about, right? There's so many opportunities in tax if we just slow down and think through what we can do. So hopefully this was helpful. If there's any other questions you guys have, please feel free to drop them down below, because if you're thinking about them, somebody probably else is, and then I can answer it there and help a lot of you at one time, which is what I really want to do. And that's it. Have a wonderful December. Take advantage of any planning opportunities you can. And actually, on that piece of equipment, I want to make sure, I talked about it the other day, if you're going to go out and buy something for this purpose or tax purposes in general, don't forget, it has to be placed in service before the end of the year. If you go buy a piece of equipment, but they can't get it to you till January 1st, no good, doesn't count, you're gonna be mad. So I wanna make sure you understood this. It has to go in service this year. That's it, glad to help. If you have any questions, let me know. See you later. Scratch all that. This is gonna be a big cutout.